Hi everyone, how are you? Hope you are well. So today we're going to talk about the banks and why you should not have your money in the bank. The news lately is that these banks are failing. So far there has been three named in the media, and they are wondering if there will be potentially more, if it will be a domino effect. So they are saying that the United States banking system is safe thus far, but I thought this would be a great segue into why you should not have your money in the bank. So by the banks, I'm talking about the big banks, namely, for example, Chase Banks, Wells Fargo, Bank of America, any big bank that you can think of. So why do we have our money there in the first place? Well, some of the pros are that it's easy. They have all these franchises, and the bank is right down the street. You just go down to the bank. It's right 10 minutes away, right? So the ease of it, um, perhaps a form of habit, right? You've had your money in the bank for 20 or 30 years, right? So it's a habit. So something you grew up doing, just a force of habit. That may be another reason why we have our money in the bank. Um, some potential other reasons is that you know that your money is safe there because you've had it there for like 20, 30, 40, 50 years. Another potential reason why we have our money in the bank is that um, you know that it will pay. Say if you wrote a check and you don't have any money in the bank, you know that the bank is going to pay that. The bank is going to pay even if you don't have any money in the bank. So you have that in the back of your mind, perhaps. Um, Kind of a sense of security that you're going to still be able to buy things, even though there is nothing in the bank. And so the bank is profiting off of that by giving you the bounce check fees, but maybe you have that as a sense of security in the back of your mind. So that may be some of the reasons why we may have our money in the big banks. Like I said, you've been doing it 20, 30, 40, 50 years now. So why should we change now, right? Force of habits, easy, right down the street. So the con of having your money in the big bank is that they are not paying you anything. So Chase Bank, as of today, is paying 0.01% interest. That's 0.01% interest. So that is how much money you're making by having your money over at Chase Bank. Now the national average is 0.35%. 0.35%. So if you're not going to have your money in the bank, where should you have your money? Well, there are some other places that pay higher interest on your money. Number one, we have Marcus by Goldman Sachs. Marcus by Goldman Sachs is online. It's a high yield savings account. It pays 3.75%. So as opposed to Chase Bank, 0.01%, putting it in Marcus by Goldman Sachs, 3.75%. So that's a big, huge difference in the interest rate that they are paying. Other potential places would be something like SoFi, 3.75%, or Discover, 3.50%. But the highest paying is Marcus by Goldman Sachs, 3.75%, and then SoFi also 3.75%. So these are online high yield savings accounts. And so these are FDIC insured, uh, up to $250,000. So it is safe. It is backed by the government. Now, I know it would be unfamiliar to you have your money here. You've been having it here for 50 years, and then to put it over into an online savings account. I know that that would be kind of like a weird transition, But the big bank is really ripping you off, and the online bank is offering you more. So you can keep some of your money over here at the big banks and then just gradually move some over here until you get used to it because this new place is treating you better. So perhaps you're getting used to perhaps you're used to getting treated bad. So just gradually move it over to this place that is going to treat you better gradually. So it doesn't have to be all close this, open this. Just gradually put some money over there until you get used to it. And so I did a savings calculator for a concrete example, and I put a realistic number in there. Say you have $2,000 in the bank because your money shouldn't be in the bank anyway. It should be in investment accounts and real estate. A whole diversified portfolio. So you got some over in real estate, you got some over in investments, um, different places instead of having a big lump sum over in the bank. So here's a concrete example. $2,000. You got $2,000 over at Chase Bank. It's making 0.01% interest. So $2,000 in 1 year. After 1 year, you will have a grand total of $2,001. Okay, so you take $2,000 and you have it over at Marcus by Goldman Sachs, making 3.75%. After 1 year, you have a grand total of $2,076, right? So doesn't really sound like a big deal, but that's $76 more than you would have had over at the other place. So it's the difference of having your money in the big banks or a high yield savings account. Of course, you will see that number drastically increase if it were a higher number. If it were like $10,000, for example, you would see a difference, like a $300 difference. So the more money you have in there, the more difference you would see between the bank and the high yield savings account. So just something to think about with the collapse of all these banks going around, knowing that it's not really a good place to have your money. Also, if you are interested in buying property now or in the future, it's a good idea if you are having things happening like bounce checks happening, for example. Um, it's a good idea to get into the habit of transferring your money from the different account to cover that before the bounce check happens. Because if you're interested in buying property, some of the lenders, they're going to be looking at that. They're going to be looking at your uh, history. So you want that not to be happening because all of that is recorded, all of that is documented. So you want to get out of the habit of doing that if that is what is happening. So it will become fewer and fewer and fewer and fewer and fewer and fewer to none. So that when you get ready to go buy your property and you go to a lender and they're asking for your documents, your statements, they'll look at your statement and they'll see a pretty clean statement. All right. So just something to think about, something to keep in mind, and it can be a gradual change. It doesn't have to be all at once. So as long as, progression is happening. So I'm all about progression, not staying in the same place. All right. So if you like the channel, please hit the like button, hit the subscribe button if you're not a subscriber, and the notification bell next to it. Thank you for watching.